frustrated. I'm a fire starter, twisted fire starter. You're the fire starter.
Hey, it's Delay, and this is episode 451 of the Orange Pill Investor. I thought a nice fire song would be appropriate for episode 451. The second best was going to be "Fly Away" by Lenny Kravitz, since I'm leaving straight from here from this video and getting on a plane. So I'll see y'all in Portland if you're going to Bitcoin is for everyone. If not, do something fun. What's up, Howard? Thanks for confirming the sound is good. Yeah, I gotta hurry up and get those shorts off. I'm hoping for some fireworks, but fingers crossed, but you never know. What's up, Grit? Yeah, yeah, that's a good one. Hopefully there will be some fire. The Sailor was tweeting out the earnings call and was like the most important. What was it, the most important call for strategy in strategy's history or something? They were really trying to pump up the earnings call hype. What's up, G? If MSTR doesn't pop off tonight, I'm gonna be pissed. Yeah, I'm trying to do the reverse jinx and just like, yeah, I don't think it's gonna go anywhere. The market doesn't really. The market kind of knows what's gonna happen. Their little EPS, 10 cents per share or whatever the hell the consensus prediction is. I think the market knows that's BS. So I'm not really. I don't know. I've been burned so many times. Like, we had a QQQ pump, but then it was like, okay, something amazing was supposed to happen for Thanksgiving, I think, and then something else was going to happen. We had that historic expiration in January, and then it just seems like it's kind of been like, it's almost like when Charlie Brown thinks that Lucy's going to finally hold the football and he's going to get to kick it, and then he just falls for it every time. I kind of feel like Charlie Brown. I just keep thinking we're going to get that massive face melting rally, overnight gap up, and I'm still waiting. So hopefully the reverse jinx works. And how was that commercial? It's only weird if it works. All the superstitions. So preferred get rated AAA. Oh, so you think maybe that's what the announcement is about? That would be pretty freaking cool. I think even if we don't get the huge gap up, this could be the bell for the market to start front running S&P 500 inclusion. And I tell you what, either like strategy might just be watching my show just to piss me off and make me look stupid, because I was kind of trying to make excuses for why strategy was so under leveraged, and I thought maybe it was because they were trying to game acceptance into the S&P 500. And there's a couple of reasons why the committee could say no. They could say strategy is too volatile. We don't want anything as volatile as strategy in our fund. They could say, if strategy was at the top end of their leverage range, or if they were over leveraged, they could use that as an excuse. And I thought, oh, okay, well, maybe they're trying to keep their leverage ratio down, and maybe they're trying to keep, using the common ATM to tamp down the volatility on the stock, just as a little bit of gamesmanship to take away the S&P 500 committee's ammunition to keep them out of the fund. And then, of course, they announced Stretch with a frickin' supersized value meal upsize to 2.5 billion or whatever the heck it was. And now Dan Hillary was reporting that their leverage ratio was like closer to 20% now. And So me thinking that this was like 44 double D chess was just not even remotely correct. Like they're either not gaming the S&P 500 or they're gaming it in a different way than I had imagined. And really what it looks like is they probably just had to keep their leverage ratio low because they knew they had stretch in the pipeline. So in order to have space to add $2 billion worth of debt in one shot, they needed a low, they needed to have space. They needed a low leverage ratio. They, if you looked at that, I think it was slide number 19 on their presentation. If, let me see if I have it handy. Yield curve. Here we go. There's space in here for like 2 more preferreds. So if they add another 2 billion on STRU and another 2 billion with STRE, that gets them into a nice kind of sexy leverage ratio, somewhere between that 20 and 30% range, which I think that's what their target was. And so that may be what they were gaming, is trying to keep the leverage ratio low so that they have room to grow with these preferreds. And they know how many more, they're going to offer the market. Whether we get another variable rate one, but not tied to like a stable coin price, or maybe we get a variable one that's like strike with a call option or something to fill in those gaps. Who knows what they've got coming, but those at least sound likely because they're variations of their existing product, which, STRD was a variation of Strife, a higher risk version of Strife. So they could just offer higher risk versions of their flagship products, like Strike or STRC. So that'll be kind of fun. We're all just kind of on pins and needles waiting to see what the next preferred offering is going to be. I thought the coolest suggestion was somebody in my comments mentioned one related to housing, and you could maybe fund a home purchase, and there would be some kind of, I really need to take a look at that more and maybe ask Grok what they think about it. So that would be fun to cover. But I've only got like 20 more minutes before I got to haul ass to the airport. So let's make this shit happen. Where we go. Here we go. All right. Unfortunately, I had been attempting to pare down my margin, but my margin was actually growing. So let's see if I even have enough margin usage to close all of these positions. Okay, reload app. So I sold these for whatever the heck I sold them for. 1,200, 1,400, something like that. So this pretty much worked out. It looked like it was not going to, because when strategy was at like 455, those were all underwater. This would be the only one that I would consider keeping overnight, because even if we did gap up above 425, I could just close the long call along with it. But let's just go all in. And I'm just going to take off all my short positions. Okay, I just got to get rid of this reload button. It's annoying me. All right, let's try this again. Here's the IRA. So I've got, let's see, I've got $1,000 in cash. So I do have enough cash to close this. $700 to spend. Nothing really to do with Tesla. So I could either buy 2 shares or pick up. Yeah, let's add a January 1080. Wait, why is it saying that I have some? January. Yeah, I've got 2 of them. Can't be. It only goes up to 960. How is that possible? January 16th. Did they take away some of the strikes? And why would it be? Why is the value $500? All right, where's the yeah, so it's showing my 200 strikes. Oh wait, I have 350 strikes. It's not showing those either. Oh, I have Tesla selected. What an idiot. Okay. That's working out better. Okay, cool. Now I have 3, and I have no buying power. Much better. So you gotta see, me being in a hurry, you gotta be careful. So I just did my copy trading with my brother-in-law, and I told him to try to sell a cash secured put for 0.8, and he put in 0.08 and ended up selling the damn thing for like $14 instead of 80. So that is unfortunate. All right, same deal here, just closing them. Oh, I don't have enough funds in this account. Let's see, I've got 23. It says I have $2,300, but I don't because of this. I could dump these put credit spreads. That might give me the buying power I need. Let's see, can I close 1? Nope. All right. So I originally sold these Tesla put credit spreads for $258, I believe. So if I buy them back for $193, it's not the profit that I was hoping for, but maybe it just will have to be enough. Let's just close these. This should free up enough buying power for me to close the there we go. To close the short calls. And then tomorrow, if I put the short calls back on, that should give me the buying power to put the Tesla put credit spread back on. So that's fine. says I have 800 in cash, but I think I'll just leave it there. Same deal, just closing all the shorts. 250 trading days a year. If I don't earn theta on 4 trading days, that's fine. And there's some statistic, and Saylor's even cited it himself, about basically against people being traders, because supposedly there's just a handful of days a year that captures all of the gains for the year, and like, are you going to get lucky enough to do that? I think for most companies, especially like a Tesla, I would guess that most of those days are going to be on some kind of announcements. So binary events like earnings call, you get a surprise earnings, okay, the damn thing gaps up. So for companies that I'm super bullish on, earnings calls particularly, I'm afraid of carrying shorts. Strategy, I would say for the most part, I'm not afraid of earnings calls in that way, just because what could they possibly say? Like, everybody knows what Bitcoin's price was at the end of Q2, so there's not really, they can't like surprise us like, oh yeah, we sold an extra 10,000 cars this quarter. Like, the MSTR is not going to announce anything like that. So, but it's just, so it just may just be superstition at this point. It's not really based on any fundamentals. All right, so the CLSK $12 call expires tomorrow, but I will be in the conference. So I'm just going to roll this out a day early. I sold it for 39. I can buy it back for 9. So let's just roll this out. 8 days. And let's see, I had the $12 call. So I can roll it out to the 12 again for a larger credit. That's only about 52 cents worth of call away value. I could roll it out to the 12 and a half. That's still almost 3% return on the capital over 1 week. Plus that gives an $1 of call away value, which is not quite 10%, but close enough. So let's see if I can get a fill at 22. Doesn't look like it. Let's do 21. Really? They're going to make me beg? Okay, it filled. That's the only thing expiring tomorrow. These 815 ASST puts, these are already basically in the money. So I'm getting hammered on these. So it's probably nothing for me to do here except just sit and take it and then allow these to be assigned. If I am forced to buy these at $5 a share, I got paid 92 cents to sell the puts in the first place. So that's going to drop my cost basis to 408, which isn't great. That makes me down 70 bucks, 70 cents a share. So 70 bucks total on these, but should be able to just turn around and sell covered calls. As long as AST doesn't drop too far below $3 a share, should probably be okay. Because otherwise I would probably have to start selling the 250 strike, and that would get a little dicey. If Strive falls below $3 a share, I would probably just cut bait, because it would be too hard to collect premium on a stock that cheap, and I would just have to chalk it up as a loss at that point. Everything else is already rolled out to a reasonable time frame. And I don't think I have much buying power to speak of. Yeah, like 300 bucks worth of buying power. Nothing worth trying to spend that on. I suppose I could get another Tesla long call, or can't quite afford a strategy one. So, oh, I was going to try to take off my, yeah, I don't have enough. I need 460 bucks to close this strategy 822 covered call. I could dip into margin, or what I should have done was just closed out that CLSK put for a profit. I guess I can use $100 worth of margin potentially. If it lets me close this, we'll see. We'll see. Let's see if it lets me close this and just use a tiny, tiny smidge of margin, or if it's going to tell me I don't have enough margin for this. All right, let's put it back in for a little more. There we go. Okay, so let's see how much margin I'm using now. High risk margin. Okay, so I don't like that. I do not like that, Sam I am. I could, what do I need? I need like 160 bucks. I could take off that debit spread I put on. Or I could just, how many AS strive positions do I have? You know what? Let me just close one of these out, because this will free up the $500 in collateral. So I'm just going to take the loss on this one. It was about 90 bucks here. See if I can even get a fill. It might cost me more. Oh, did it work? Nope, it canceled. All right, let's try to get this over with. I'm just going to smash the, actually that's a little bit too much. Let's do 1.9. If 1.9 doesn't work, I'll try 195. Okay. So let's refresh and see if that was enough. Otherwise, I'll just... Okay, cool. So now there's no margin use. I've got like $148 worth of buying power. Okay. I much prefer that. I don't like that margin warning at all. All right, cool. I think that's about it. And now it's time to haul ass and jump on a plane. Gris says there's fewer people doing the Bitcoin price at the end of Q's math than one would imagine. Yeah, it's probably very small. It's just us. It's just a few irresponsibly long degens that are vaguely aware. All right. Unfortunately, I will be on the plane during the earnings call, so y'all will know all about it as soon as I get cell phone coverage again. As soon as the plane lands, I'll be listening to it in 2x speed on the way to the hotel.